Okay, I'll try not to be boring because insurance can really be dry if you're not careful. But basically, if you own a home, you'll receive a copy of your policy. And this is all going to be very generic. This is not company oriented, okay? You'll receive a copy of your policy. And then when you renew each year, you'll get what's called a declaration page. The declaration page, what most people are familiar with, tells you how much coverage you've got on your home, your personal property, other structures, whether you have extra jewelry coverage, identity theft, things like that. Your actual policy describes in detail when these things kick in, what the coverages are, because in insurance, we giveth and we taketh away. You have to be able to read the whole policy sometimes to know exactly what you've got. For example, in your homeowner policy, excuse me, in your homeowner policy, there is a section called exclusions, and that's on your personal property. And that's going to tell you, like, jewelry's limited to X number of dollars for proven theft. Coins are limited. Some electronic equipment is limited. There are all sorts of limitations, but you have to read back inside of that to find that particular section. And you just look under exclusions. Your homeowners is made up of two parts. The first part is your dwelling protection, and it's going to list it. If you've ever looked at your deck page, if I can show you one here. If you've ever looked at your declaration page, and it's on your homeowner policy also, it's going to tell you exactly how much coverage you've got on your home. And what you're going to want to look for is, do I have some form of replacement cost? All right, what replacement cost on your home means is, if you're insured, let's say you're insured for $200,000 on your home. Your home burns to the ground, not as a development where the builder comes in and has all these cost-cutting abilities. You're building yours kind of like a custom home. So they have allowed, in many cases, it's 25% over and above that. So if you had a $200,000 home, we would actually spend, if you had the 25% overage, you would actually get up to $225,000 to rebuild your structure. Now that's real important, because keep in mind, you're worried about inflation hitting because of massive amount of claims and a lot of people buying for the same roofers, same sheetrock people. And then you've got to have that building torn down, hauled off. There's so many expenses people don't realize. But that's your basics. When you get your declaration page, be sure and look at it. Make sure that you understand you want replacement cost on your personal property. Otherwise, you're pretty much wasting your money. If you have actual cash value, they're going to depreciate everything down, where if you have a replacement cost, they're going to replace it with like kind but brand new. Okay? So that's those two areas you really want to look at. Second part of your homeowner's policy is your liability section. You have personal liability. Now keep in mind, all this covers you on and off premise. You're traveling, like Carol said, so even overseas, something is stolen, that comes back to your homeowner policy. You're in a restaurant and you've got your legs crossed and someone walks by and trips over your leg, they could sue you. Now I'm not saying they're going to win, but they could sue you. That comes back to your homeowner policy. So especially if you're in North Carolina, to increase your homeowner coverage from $100,000, which is standard, to $300,000 is probably under $10 a year. So look at having good liability. You never know when it's going to come in handy. If you've got kids, grandkids, anything away at school, they have an accident, that can come back to your liability if they're at fault, if they're deemed to be at fault. And that, there again, comes back to the law and what happened and all the specifics. All right, now we talked about in your actual insurance policy. That's the big thick one. You usually only get that when you first take out your policy. In the beginning, you want to be familiar with who insured is. Insured is defined in the front page under definitions. The reason that's important is it does extend, if you have children going away to college, they're still your insureds. their personal property in that dormitory is covered under your homeowner policy. In fact, as long as they're in college and they're under a certain age, depending on the company you're with, your personal property would even be covered in an apartment. So it saves mom and dad from having to buy another policy for students away at school. The second part, like I say, it's going to define what is covered. Again, you want to just look at your policy. And this is why what Carol's saying with the inventory, it is so important that you have something, because you're not going to remember. You're going to forget more than you actually remember if you have a fire. I mean, we've actually talked to people and said, close your eyes, what was in that closet, you know? I had one customer that sent me a CD with her inventory because she wanted to keep something away from home. Now we have a lot of these digital things, you know, but back then she put it on a CD, sent it to me, and I had paper files back then, and I put it in my file for her. Fortunately, she never needed it, you know. In fact, I just talked with her the other day, and she said shred it, so I shredded it for her. The other thing is, on your homeowners, so much coverage here that people just don't realize. Your other structures, you have a detached building, a swimming pool, that's other structures. You have a percentage of your policy that goes for other structures, 10%. Very few people look at that. Now, is it critical? No, not if you don't have a lot of other structures, but we've had people who've had docks and pools and all sorts of things, and their 10% was nowhere near enough coverage. So keep that in mind. That's a real important section for you. Then you have loss of use. You have major damage, your house isn't livable, you're going to want to be able to live in a motel or an apartment or whatever it takes till your house gets back to shape. That's where your loss of use. That's another thing that your policy covers that a lot of people overlook. The thing I was telling you about, it's called special limits of liability. Please take a look at your homeowner policy and see what your limits are. If you have nice jewelry, you're very restricted on what will be covered. For mysterious disappearance isn't covered unless you schedule it. Schedule it means get an appraisal, put it outside of the policy, so to speak. But a lot of folks don't realize these limitations. But I'd like to hit on a few things. We have a lot of our customers will call us and say, what if, you know, or hey, Pat, this just happened to me, you know, is that covered type situation. If in doubt, we get in touch with our claims reps. We say, hey, is this something we ought to turn in, and so forth. But things that a lot of people don't understand. All right, Carol just mentioned computers in your home. Your electronics in your home are covered. Your TVs, your computers. Now, we're not talking about business computers, we're talking about personal computers. All right, you start taking stuff in your car, and it can use the adapter in the car, or it can use a plug. Your limitations are all but out the window. That's why people lose their cell phone. They don't have coverage unless they buy it through the cell phone company, okay? But on premise, your stuff is pretty much taken care of. If you have, a lot of people have antiques, valuable antiques. I can't encourage you enough, inventory it. If you can find something with a value, because an adjuster's not going to know the value of your antiques. You know, do what you can to protect yourself on those. If you travel with them, you better schedule them. And you laugh, who's traveling with their antiques? I had a customer, he flew back to, I forgot what country overseas, with a $50,000 Oriental rug he was taking back home. And it got stolen, needless to say, by, he thinks, airline personnel type thing. You travel with that, you better have it scheduled. Like the jewelry, you get an appraisal and you have it as a rider to your policy. But this all comes under your special limits of liability. All policies have them. Please take a look. Now, a lot of things that people don't realize is, tonight, a perfect example, we have this huge storm. All of a sudden, your tree falls on your neighbor's house. Do you pay for it? No, not necessarily. And we just recently, if the tree were dead, then you have a chance of your homeowners covering it for the neighbor. If your neighbor had written you a letter and said, your tree is dead, you know, please get it removed, and you didn't, then your liability will cover it. But if it's an act of God, nope, their homeowner has to take care of it. So don't run out and say, I'm going to pay for it, don't worry, because you're going to be on your own. Unless the adjuster comes out and says, you may not have known it, but this tree was dead, look here, and then it depends on the company whether they'll go with you. But typically an act of God, which would be wind, water, too much water causes that tree to fall over, you're not liable. Their homeowners has to take care of it. So many things you can add to your homeowner policy, but overall, remember, it's covering you almost anywhere you go. It's covering you for theft, it's covering you for your liability. It does not cover personal liability, personal injury, meaning slander and libel. That's an excluded peril as a rule in a homeowner policy. That's where your umbrella kicks in and it picks that stuff up. An umbrella covers all your exposures, but you have to have the underlying coverage. And each insurance company requires different things. We've seen some that say on your homeowner policy you have to carry $500,000 liability, then $1 million umbrella picks up on that. Where you worry about an umbrella is you have a swimming pool, you better worry, you need an umbrella, because if a child drowns in that pool, it's an attractive nuisance, you could be sued. If your auto is your big thing that the umbrella picks up on, because that's where you can end up in these big lawsuits. And I was telling Carol and her a couple weeks ago, my grandson took this driving course, and I'm not going to get into auto insurance, but this is the umbrella. He took this driving course by this race car driver who lost 2 kids in Charlotte a few years ago because his oldest son was driving reckless. And so he's teaching these defensive driving courses, i.e. how to overcome going off the side of the road. And one of his men that teaches this course got up and said that his mother-in-law was killed in an automobile accident, and that the gentleman whose son was driving the car that killed his mother-in-law was so angry with his son upset with paying premiums because his son kept getting tickets, accidents, and so forth, and he was carrying minimum liability. The gentleman was also in the process of building an $800,000 home. And the speaker said, my attorney came in and he said, this $800,000 and some odd home, he's never put a foot in because it's not finished yet. You want it? Here's his 401k. Here's his this. He said, what do you want? An attorney can find out everything you own if you're in a lawsuit. And that's where the umbrella kicks in. There you've at least got $1 million worth of liability protection to help offset it. It's just, and like I say, if you own a boat, it picks up on the boat, it picks up on the rental property, it picks up on the auto, your own personal home. We had a gentleman looking for insurance for a friend within the last year, and my son was doing everything he could to place it with one of our brokers, because what had happened was they had a swimming party for their grandchildren, and their pool had gotten cloudy, and these parents had dropped off their kid for this birthday party or whatever and left, and the kid hit his head or drowned somehow and no one noticed it because the pool was all cloudy. And they had over $1 million lawsuit against them for the death of that child. So it doesn't mean you're being, I mean, in that case, a cloudy pool, I wouldn't have let kids in, but you never know when it can happen to you. A freak accident, you turn left in front of a motorcyclist that you don't see. You hit him and you kill him. He can sue you for everything you got, you know. That's what the umbrella's about. And you're exactly right. The more exposures you've got, the more important it is. What is the price of an umbrella is going to depend on your carrier, it's going to depend on how many exposures you've got, and it's going to depend on your age in many cases, because as you get older, that's when people want an umbrella, and that tends to be when we see more accidents, you know. So But typically an umbrella is not that pricey. It's something you should look into with your carrier. And a professional, like your CPA, they're going to be more likely to sue you than they would be someone else. Yeah, no, it's amazing. It's everything is out there. They can find out anything on any of us, and that's where the umbrella is such an advantageous thing. Oh, most definitely. Your liability on your homeowners covers the attorneys. And let me tell you, these insurance companies, they don't hire nothing. They've got some really good attorneys. So yes, and that's not, you have a $300,000 liability on your home, you get sued, that $300,000 is what your payout is. It doesn't count the attorney fees. The attorney fees are the insurance company's problem because they're defending you. So we can't guarantee you win, lose, or what, but at least they're there doing their best to keep you from having to pay out. Well, flood insurance is totally separate. Your home doesn't cover three things. It doesn't cover flood, it doesn't cover earthquake. Well, there's a lot more than that it doesn't cover, but your major disasters, flood, earthquake, and death. And you wouldn't believe how many people think their homeowners will cover death. It won't. So if you, Earthquake and flood, death. Yeah. I know that sounds crazy, but we have people come in saying to us, such as my husband just passed, does it cover death? Those three major things. Now there are other things, earth movement, things like that aren't covered either. Tornadoes covered. That's wind and hail. Unless you have an exclusion on your policy, it's in there. So yeah, that's a big one. That's a real big one. And like I say, a tree falls on your house and damages your house, they're going to pay to have that tree hauled off. If it falls in your yard, you're on your own type thing. The flood insurance includes flooding of the sewer system. The sewer system gets flooded from all this rain, backs into your house. That's groundwater. Flood is groundwater coming up. Broken pipe is not flood. Groundwater coming up is flood. So it can be anything. In Charlotte, if you're in the city limits of Charlotte, they have always covered the sewage backup up to, I think, I don't know what it's at now, and I need to check, but for years they've covered for citizens because sewage backup is from the city lines into your house, not from your lines, okay? So that's something that's out there, and you can check with the city of Charlotte if it's of interest to you. But they have covered up to $10,000, I think, for sewage backup. That's not flood either. Flooding of the sewage system is clean water coming up. Storm drains, things like that. Road runoff water, where it's high and you're at a lower level and it comes down and it floods you, that is flood. Flood insurance is a government program. Every insurance company, same price, same requirements, same everything. So if you're in a flood zone, your insurance agent can pull up and check to see if you're in a flood zone that's high risk. You can buy a preferred policy. They're relatively inexpensive if you're concerned about flood. Typically around $400 a year for a preferred policy. The maximum flood insurance will cover is $250,000 for your dwelling. You can buy excess, but most people kind of go with the $250K.